Hi there, welcome to Trading Day. Let's check out some of the guests we will be bringing you on today's show. We're going to be joined shortly by Europe's Commissioner for Financial Services and Savings and Investments. And we're going to talk about investment opportunities between Canada and the European Union against, of course, the backdrop of massive deficits Canada runs with Europe in both goods and services. Let's get to the big stories we're bringing you from our newsroom. Kevin Warsh facing Congress today for his confirmation hearing to replace Jay Powell as chair of the U.S. Federal Reserve. Lawmakers focused questions on Fed independence after U.S. President Donald Trump said he would only appoint a chair willing to lower interest rates. One senator pressed Warsh on that independence.
Do you suspect that he chose you because you indicated to him that you want to cut rates?
Senator, I don't know the reason for the president's choice, but I can tell you what I've been writing about for 15 years and what I said to the president, which is
you're going to cut. I'll cut rates if you give me the job.
No, that's not what I said, Senator. Now, the president, as you might know, much like virtually all presidents I've either known or studied, presidents tend to be for cutting rates. I think the difference is President Trump expresses it quite publicly without surrogates or subterfuge, but presidents want lower rates. But Fed independence is up to the Fed.
Ottawa has launched a new advisory committee on Canada-US economic relations. The group is to help prepare for the joint review of the CUSMA agreement this year with the goal of maintaining and building on the existing framework. Several high-profile names are on the panel, including Erin O'Toole, the former Tory leader, Lisa Raitt, former Tory minister, and Flavio Volpe, who represents the Canadian auto parts makers. This committee is set to hold its first meeting later this month. Shares in Docebo on the rise today. This small-cap Canadian software provider has been pummeled over the past year, but it did get a boost after releasing preliminary results and raising its forecast for sales and profit. The company says it is seeing strong demand for its AI-enabled workforce readiness platform, pushing back against concerns that AI will disrupt its business. And there's a look at the TSX, down a little in trading today. It is being dragged down in part by gold stocks. Gold prices slipping as we saw some strength in the US dollar. There's like Nico Eagle, of course, just announced a massive roll-up of assets in Finland worth more than $2 billion. And there's Wheaton Precious Metals, which has been a darling among gold investors. And let's have a look at the US markets. They are slightly down. The S&P 500 trading near record highs, of course. Actually, both indexes, it and the NASDAQ, hit new record highs this morning. One company in the news is Tesla. Tesla announcing weakness in California sales. Apparently, that's a heartland for Tesla. Apparently, buyers there are going for hybrids. And also, of course, Apple. Tim Cook will step aside in September, and the company's hardware guru will take over as CEO. One analyst saying that Apple needs to, or the new boss needs to resist the temptation of incrementalism that has plagued the company of late. There's a perception among some investors that the company has been too consensus-driven under Tim Cook. There's a look at a scorecard over 10 years, and you can see Apple has beaten those two arch rivals over the past decade. John Turnus, 50 years old, joined Apple way back in 2001 with a mechanical engineering degree. A delegation from the European Union is in Canada to explore economic opportunities. Here to talk more about the visit, Maria Luis Albuquerque, who is European Commissioner for Financial Services and the Savings and Investments Union. Thanks very much indeed for joining us. Can you tell us what's your main goal here in Canada?
Well, I am visiting Canada at the invitation of Minister Champagne. I would not exactly say that this is a delegation of the European Union. It's me as Commissioner visiting and engaging with financial sector stakeholders, namely the authorities, the supervisors, the minister, the pension funds, also met a fintech. So basically engaging with Canadian stakeholders, discussing common challenges and opportunities.
And what's the main challenge, do you think, right now the two entities face?
Well, we do face the same changed geopolitical landscape with one of our main partners. We are both focused on increasing the competitiveness of our economies and also on building strategic autonomy. So we are like-minded partners, and we think that there is a lot to be gained from engaging further and having a deeper cooperation.
You are a former Portuguese finance minister, so you have deep knowledge of government. What about the trade deficit this country runs with the European Union? It's pretty big in both goods and services. Is that likely? We're showing there, this is just trade in goods. And you can see that the European Union persistently runs a surplus with this country. Is that going to be on the agenda?
Well, not for me, because I am not a trade commissioner. So typically these topics would be discussed with my colleague in charge of the trade area. So I am more here to engage on the financial services area, understanding a bit how we can also both contribute in the international fora where we discuss the global standards, Basel implementation, things like that, where we face common challenges, and also we share the concerns about the international level playing field now that we have some more visibility on where the US is going on the Basel implementation.
What did you, I think it's tongue-in-cheek, but people have talked about Canada joining the EU. The Prime Minister was pretty quick to dismiss that idea. What do you think?
Well, I think that there's plenty of room for us to deepen our ties and to collaborate more closely on many different areas. As I said, we are like-minded partners. We share the same views. We can cooperate more on sustainability, climate transition, also see what we can do about investment flows. But the European Union is within the European geographical space, and that there is that's not really something we can do anything about.
What about fintech? Just remind us what the EU has been doing on cryptocurrency. You're obviously former finance minister, you've training in economics. Has the EU been as favorable to development of cryptocurrencies as the Trump administration?
Well, we actually were precursors in creating a framework to regulate the crypto asset space and the activity of crypto asset service providers. So the MiCA regulation has been in place since late 2024. So it means that we have a framework that allows the development and deployment of such tools, but at the same time having proper regulation and supervision, namely when it comes to AML. So we wanted to have a framework where we would have the necessary safeguards, but at the same time allow for innovation in this space, as it contains the potential to improve efficiency and growth in financial markets. And we are also looking at developments in other jurisdictions, obviously, to see how we can continue to be competitive.
How is crypto going to improve efficiency? It's a hidden currency that's handy for criminals and money launderers. How does that do anything for the economy?
Well, that is why it is important for us to have this framework in place, because we have these anti-money laundering controls and checks on all crypto transactions that happen within the European space. And it's very important also to engage with other jurisdictions to make sure that we have common approaches so that we can minimize such risks at the global scale. But such a framework to keep this under control exists in Europe, and it has been in place since 2024.
What about, you were talking to big power, you're here among the people you'll be talking with, or you have talked with, big pension funds, and obviously they have invested heavily in Europe.
Yes.
Have we seen reciprocal investments by big European pension funds in this country?
Well, in Europe, the pension fund industry is not as developed as we would like it to be. We have a few member states with relatively big pension funds, but actually across the board, the picture is quite not that good. To just give you an idea, 80% of the European pension funds manage under 1 billion euros, and 1/3 manages under 25 million. So it is really not that competitive to go into the international space. We have put forward a package on pensions and tried to stimulate not only the development of pensions, occupational pension systems, but also removing any regulatory constraints that there may exist to the scaling up of our pension funds so that they can also be more active in the international sphere. And as I understand also from the mandates of your pension funds here in Canada, there is the focus on returns to future pensioners, and obviously the diversification approach of trying to invest in different geographies, which is pretty much also what happens with the European pension funds that invest abroad.
We'd better leave it there. Thank you for giving us the time today.
Thank you very much.
Maria Luis Albuquerque is a European Commissioner for Financial Services and the Savings and Investments Union. Coming up, stocks, or at least US stocks, have been hitting record highs in the past few days, under a little bit of pressure today. We'll get more after the break. Welcome back. True trading day. We've seen a bit of pressure on stocks today. You can see TSX down about 1.5%. But our guest argues that markets have been in an uptrend and that small and micro cap stocks have been leading the way. Let's get more from Chris Vermeulen, founder and chief investment officer at the Technical Traders. Chris, thanks very much indeed for joining us. Maybe we'll put up or do 5-year charts work best for your analysis, or 3-year?
Well, I like to look at multiple time frames.
Sure.
I think a 3 or 5 year both give you a nice big picture view of what we're looking at, for sure.
Well, let's put up a 5-year for the S&P 500. So obviously hitting record highs, even this morning, and you argue they're still in an uptrend.
Yeah, we've definitely seen, the Strait of Hormuz created a little bit of a sell-off earlier this year. A couple of weeks ago, we saw the end, or potentially some resolution there, and investors started to invest right back into the equities market. We have seen small caps, micro caps surging higher. We've got the U.S. indices at all-time highs. The TSX is testing and getting very close to another all-time high. And yeah, the trend is very strong from a long-term standpoint. When you look at a 5-year chart, the long-term investor should still be invested. The tide is still going up, even though I think there's signs that it might, this bull market has had a very long run. You still have to be invested in this equities market because the underlying long-term trend is up. And short-term, over the past few weeks, it has had a very strong run to the upside. And I still think we're going to see more upside over the next month or so. But
you are concerned, I think, about sentiment in the United States and the news. In particular, in relation to U.S. stocks, are you detecting excessive optimism?
Yeah, so a couple of weeks ago, when the stock market put in a significant bottom, there was multiple technical signals there telling us, hey, the market's oversold. And then suddenly we saw a huge wave of money start to move into the markets. And I like to track multiple different asset flows and different asset pricing. And so we could see a huge wave of money starting to move in. But the news was very negative. No one really wanted to get back in. They were worried that it was just a bounce and the downtrend was going to get a lot uglier. In fact, the trend kicked into an uptrend. It has been screaming higher. And now, as of Friday, we actually did see a wave of what I call FOMO buying. We saw a lot of people covering their shorts Friday into the weekend. We saw a lot of investors who missed out on the recent bounce piling in. And when there's a certain volume skew of how many people are piling into U.S. equities, buying on the ass, they don't care what price they get. They just need to get in because they're missing out on the rally. When there's a big out of balance on that to a certain level, I call that FOMO. And it usually becomes a crowded trade. And so Friday was saying, okay, expect the market to start pulling back, trade sideways or a little bit lower for a few trading sessions. And that's what we've seen so far. The market's pulling back. I mean, I think it could still pull back a couple percent and still be very, very bullish here. It has gone straight up. I don't really want price to go straight up. We want it to do a stair-step price action. That means it's a controlled move. So I think investors there's a little bit of a breather right here, a little bit of a pause, but I do think we're going to see this market push higher. The S&P 500 has about 7% upside potential to the next target based on the chart patterns that are at play here.
Gold and silver, you do reckon they're in a long-term uptrend, but you're wary in the near term?
Yeah, I mean, when a long-term investor, I mean, there's a very bullish story for precious metals long-term. When you look at all the fundamentals, you look at fiat currencies and all of the money flows there. But when you look at the daily chart, there has been a ton of damage done to the short-term charts. A lot of volatility. We saw silver fall about 40%. I think we could still see a lot more volatility in the precious metals space. I think right now we're kind of on the sidelines, waiting to see if precious metals are going to stabilize and start another big run to the upside. I think there's a lot of upside potential. If the chart pattern resolves to the upside, it'll be a great opportunity for another leg higher. I think gold could go to about $8,000 per ounce. Silver, the next target is about $165 per ounce. So there's a lot of upside potential, but the short-term charts are definitely showing we're in a downtrend. You got to be very wary here because there is a lot of downside potential here as well. If the precious metals market breaks down, the US dollar starts to rally, that is going to send, I think, gold down to about 3,400, silver tumbling down to about $40 an ounce. That's what the charts are pointing to. So when we look at that chart, as you can see of silver, it's holding its ground. If it can start to move higher, it'll be a great opportunity, and it points to a huge rally from here. But right now, it's trading in no man's land. It's in a kind of a trendless environment. We need to see which way it wants to break, up or to the downside, and then take action from there.
What about Apple? Your thoughts on that company? There's going to be a change of the guard in September. According to some of Bloomberg's reporting today, there's a feeling that the company has been too cautious and consensus-driven. People, I think, want that. Some people want that unpredictable Steve Jobs magic back.
Yeah, I mean, we're looking at John moving in September 1st, I think, is the transition. And I think a lot of people, I think, are seeing it somewhat as a crisis or a change of guard. Like, it's a big shoe to follow to fill there. But overall, I mean, like, John's been with the company forever. He's the hardware operator. He's like a key engineer. He's been involved since 2001 with all of their core products. So I think it's going to be a great fit. And you know what? When you look at the stock price, it is had multiple waves and stair-stepping its way up. It's actually the investors, I think, are getting very bullish here. The chart is pointing to a much higher price. I think we could see a big breakout. I think people are excited. I think there's a lot of people frustrated with Apple saying, like, why do we still have Siri and why is the AI? Why isn't it really AI to it, right? I think there's a lot of improvement, and I think I've always been waiting for Apple to come out with some mind-blowing AI. I was hoping they're keeping it under wraps, and we're all going to be surprised someday, but it's like they don't have anything. So I think that's what people are excited for, because I think John is going to probably apply some AI here, and hopefully Apple does what they do best, which is blow everybody out of the water with some unbelievable technology and probably send the stock soaring. I mean, now it could turn into an AI company, an AI stock, which all of those seem to lure in a lot of investors.
Thank you very much, Chris. Chris Vermeulen, founder and chief investment officer at the Technical Traders. When we come back, GE Aerospace beat expectations in its first quarter. However, are rising jet fuel prices a threat to the airline industry? We'll be right back. GE Aerospace, the big maker of aircraft engines, beat profit expectations in its first quarter. And it was driven by strength in the aviation industry and also spare parts revenue. The jet engine maker is sticking with its long-term forecast, but shockwaves from the war in Iran have been driving up fuel prices, and airlines have been cutting back on planned flights. Let's get more from Nicholas Owens, equity analyst in industrials at Morningstar. Nicholas, thanks for joining us.
Thanks for having me.
First off, what jumped out for you with the latest quarter from GE Aerospace?
What jumped out is this is, in general, I think of this company should track, air travel and the demand for engine service. But they had numbers in here like 39% growth in the aftermarket, which is just pretty eye-watering, you could say. And so it was higher performance, higher numbers than I had expected in the quarter. But I think of it as them getting a good start on the year. And I sort of had an acceleration in the back half that might smooth out a little bit, but they'll end up in the same spot, so to speak.
Apparently, their turbines are even being used or planned to be used in data centers for helping to generate power. Is that a big deal?
I would say the short answer is no. I think it's gotten a lot of attention, and it's an exciting angle, related to data centers. And of course, we should say what the data centers are being used for. It's AI, so that's exciting. It's a small part of the business. It's a small number of engines, and the company. They mentioned on the call that the revenue they have from that is actually from before they became GE Aerospace, right? These are contracts for engines that or turbines that they supply to third parties who then go, let's say, refit them as a power generation unit for something like a data center. I don't think of it as a major issue at all.
The stock down a bit today. Why is that, do you think?
I think it is because of let's call it a generalized, well, I'd say two things. One, this happened in the last quarterly report as well. It seems to be a pattern of excited forecasts, or people are expecting them to raise guidance, and then when they reaffirm their guidance, that's not good enough, and so the stock sells off. I don't really understand it fully. I think there might also be a concern out there around, like you said, the Iran conflict and the let's say the scenario in which they reaffirmed guidance was, we assume elevated fuel prices through the summer, but coming down at the end of the year. So if you somehow disagree with that, the idea might be sell GE. But I don't really track that either, because I think the impact of high fuel prices on airlines is real, and the longer they stay and the higher they stay, it could eventually impact demand for actual air travel. And you have talk of RPKs or air travel maybe being flat or downish a little bit this year, but still on record global travel volume. The connection between that and a dent in the GE aftermarket, part sales and servicing, I think is somewhat tenuous. These service events are planned years in advance. You can think of it as like the 100,000-mile checkup for your car, which you might do twice in your life. It's stilling a few planes because they're going to avoid flying to some airport in the Middle East for a month isn't going to change the overall profile for GE Aerospace, in my view.
And what is the driver for this company? Is it G aircraft sales in the G7, or is it a truly international entity? Does it have big sales in Asia, for example?
Oh, very much global. And I mean, they kind of used this tagline at the beginning of their calls. Something like half of the flights in the air at any given time are powered by a GE engine. And the overall footprint, let's say, for where are airlines being founded, where are airlines buying the most airplanes, it's in places like India and China. I would see say U.S. and Western Europe as slightly more mature in terms of the total number of airplanes that are going to go into operation. But they make money servicing the existing fleet, right? All those engines that are already out there.
And their big rival, Pratt & Whitney?
Big-ish, yeah. I mean, GE is king of the hill, I would say. They are the premier franchise in jet engines. They're one of the only ones that has, let's say, a large, medium, and small families of engines. And they've been taking market share, especially on the narrow bodies, for years. And so it gives them a great opportunity to reinvest those profits and develop the next engine and sort of keep that cycle going.
And we all know how difficult it can be to have somebody come and fix your furnace or get anything repaired. And it's the same in the airline engine business. There's a big imbalance, a shortage of maintenance.
Very much so. These very specialized parts, these turbine blades and so forth that are made from highly engineered materials, they've been in short supply. You can sort of think of it as a post-COVID phenomenon, or more generally, it's just highly technical, hard to get stuff that is in extreme demand because you have an overall growth of the fleet around the world. And their tricky spot is they have someone like Airbus waiting for them to send them new engines. And they also have existing Airbus customers saying, hey, I want those replacement parts for that engine on the plane that I've been flying for the last 4 or 5 years. So it's that they've been ramping up production, and that's kind of been the bottleneck for them. And in a way, some of those heady numbers from this quarter, I think, are coming off of they were in a bit of a pinch of production rates a year ago. So that explains a little bit of the growth. But yeah, these are highly engineered, hard to come by products or parts, for what are also highly engineered systems, these engines. They can't really say exactly when they think the bottleneck will be solved. They're just working on it, and they are good at leaning out, if you will, their manufacturing process and getting faster turnarounds and so forth.
Thank you, Nicholas. Really appreciate it. Nicholas Owens, equity analyst in industrials at Morningstar. Coming up, oil prices gyrating this week. In theory, the end of the ceasefire is looming tomorrow. Stick with us. The Globe and Mail says the federal government is leaning towards a southern pipeline route to bring oil from Alberta to British Columbia. According to the report, the route could end at the port of Vancouver, and it might also face fewer environmental hurdles and less resistance from Indigenous groups. According to one source, Alberta expects Ottawa to designate the pipeline as a project of national importance this fall. Northrop Grumman, the giant defense contractor, is sticking with its full-year sales forecast, and that misses estimates. Sales for mission systems and space systems in the first quarter came in below expectations. The American aerospace company is saying global demand has grown to unprecedented levels with a backlog of $96 billion US. Shares in UnitedHealth are up. This is the giant American health insurer that has been out of favor with investors, but it boosted its revenue forecast for the full year. First quarter profit and revenue beat expectations. This comes as the healthcare company's turnaround efforts continue, with replacements in executive leadership and substantial investments in AI. United will buy back at least $2 billion US worth of stock by the end of the second quarter. This ceasefire between the US and Iran is set to expire tomorrow. Markets are watching closely. There's doubts as to whether US Vice President J.D. Vance is, in fact, on his way for more peace talks. What's the outlook for oil price? Let's get more on that and more market trends. We're joined by Pierre-Benoit Gauthier, Vice President of Investment Strategy at IG Wealth Management. Thanks very much indeed for joining us.
Happy to be here.
Start off with oil. How should investors be playing that one right now?
Yeah, well, the market is still quite reactive to all the news and headlines coming out of Iran and everything related to it. That we've seen around 5-ish% of volatility a day. But what's surprising to some is that the markets don't really seem to care anymore. Meaning by that, that at first when the war began, the scenario in which oil could jump to 150, 200, or even more was easy to imagine. Mm-hmm. Maybe it wasn't never extremely likely, but it was easy to imagine. Now, given what we know so far, these extreme scenarios are getting priced out of the markets. And it seems that the market is more and more at ease with these 90 to 100 levels that we have seen for the last couple of weeks. But as you said very well, coming in, the next few days are going to be quite interesting for sure.
What about tech? How are you and your team playing tech right now? Are you favoring some of these beaten up software stocks like Thomson Reuters and Adobe, for example?
It's a good example because in a sense, how is this war really impacting the price earning we should pay for a stock like Amazon? In a sense, it really shouldn't, right? Of course, we can always say, well, it can hurt their bottom line on this and that, but in the end, it's not as big as a deal as it could have been. So the market has started repricing these big tech companies, these giants, and it's been very fast. What we saw in the Nasdaq, 13-day green in a row, we hadn't seen that since 1992. But even more surprising, on the RSI, the Relative Strength Index for all the technical aficionados out there. So the U.S. stock market went from oversold to overbought in the fastest in 45 years. So right now, the market observants and the market actors can't be caught with shorts, knowing how fast, how furious these rallies are. We have seen it since COVID many times. When the market switches and when optimism gets back in, it goes fast. And we have started to see it in big tech, and we think this move is only starting with the earnings coming in so far. So very good on both the top line and the bottom line. I think that this could very well help sustain this rally.
On the note of caution, you think if people have gold investments that have done well, and of course gold stocks have soared, some people may be overweight precious metals now?
Yeah, that's a very good point because for many people, 2 years ago, when they started buying gold and making money on this investment, they had really no exposure or very little exposure prior, right? So it was a new investment in their portfolio for many of them. Now, in 2026, gold miners are actually a much bigger part of the TSX. So people without knowing, for the most part, are probably more closely in line with the gold prices in their pension plans, in their index portfolios, index hugging, even in the active management side portfolios. So the overall exposure to gold is already quite strong. We are still bullish on gold over the medium and even the longer run, but in the short run, we feel like most people are already well exposed, and we saw that the correlations are broken. So right now, gold is correlated to stocks and seems to be green when stocks are green. So and red when stocks are red. So people still see gold as this safe haven. While it hasn't been acting like a safe haven for a while, it's been acting like a momentum asset, like it really is, in fact.
Pierre Benoit, thank you very much indeed. Pierre Benoit Gauthier, VP of Investment Strategy at IG Wealth Management. Okay, shares in UnitedHealth had a horrible time last year, but they are up today. Investors are hoping for a turnaround at this gigantic player in the U.S. health system. We'll be right back. UnitedHealth, for many investors, it's just, or it used to be seen as a steady as she goes bet on America's aging population, ever expanding health expenditures. The stock, though, is down sharply from early last year. The shares have recovered a bit after the company posted stronger than expected first quarter results. We're joined by Lance Wilkes, Managing Director and Senior Equity Analyst at Bernstein. Thanks very much indeed for joining us. But before we get into the latest results, can you just remind us why UnitedHealth shares have dropped from about $600 last year to around $350 now? What has been the big problem?
You know, there's really been two problems at United. The first has been an industry cycle, and that had to do with, particularly in the Medicare Advantage business, as costs were really high, rates were low, and the most important thing, pricing discipline among the various players, United, CVS, Humana, was weak. And so that allowed them to, kind of continue to maintain their share, but really erode their margin. That was the biggest driver. United also had a change in management as a result of really, I think, some weak recognition of some of the challenges they were facing, and that elongated the problems that United had relative to some of those other players. So the other players, I think, confronted their challenges in 25, where United let those extend into, in 24, United let those extend into 2025.
And Medicare Advantage provides benefits similar to the original Medicare, but through a private company.
Yeah, that's right. The way it works is the government has a traditional Medicare program, and they set a pretty low price for most units, and then they reimburse at that price, and the consumer pays 20%. Medicare Advantage, they get to use the government's price because they're an agent for the government. But then from there, what they do is they employ managed care techniques to try to steer people to lower cost settings, to try to stabilize individuals in some treatment programs. And then the savings typically kind of get rolled back into the program in the form of extra benefits for the senior. Each year that lures more seniors into that program. Today we're about half of the seniors in the US that are in the Medicare Advantage program.
And is it profitable generally for the health insurers, Medicare Advantage?
Yeah, great question. So in recent years of 2016, 2022, this has been about a 3% profit margin business. The government while savings presumably from this program relative to the traditional program might be more like 18% or more, the government caps profitability for the private players here and makes those savings get passed along to the customer. That 3% has eroded, so the industry is probably generating -1% to -50 basis point margins over the last 2 years.
There's been massive executive changes at UnitedHealth. Something like half of the 100 company's top 100 leaders have been replaced. Was there a management problem?
Yeah, I think there really was. And I think the most important thing, again, my background, I've been an analyst for 10 years, but 20 years in industry. And when you're in the insurance industry, pricing discipline is really the key thing. You're always trying to decide how much do I want to grow versus how much do I want to maintain my margins. And I think United and others really got swept away with a focus on growth, and that becomes a cultural issue. And with a change in CEO and then a change in talent throughout the organization, what they're really redoing is resetting that balance so that they're capturing much more of a focus on margin, and then they'll try to moderate it and get it somewhere in the middle there.
Are they a target in Congress from time to time? People, obviously, soaring health costs are always an issue.
Yeah, I think United, being the largest player, is a unique sort of target. And there are a number of topics, whether it comes to vertical integration or other things, that United maybe wasn't as adept at dealing with policymakers about, and presumably the new CEO, who's a former CEO, maybe a little better at that. I think in addition, one of the big industry problems was the industry was incentivized to find codes for, having sicker patients, and you get paid more for a sicker patient. And they did too good of a job of it. Effectively, they were getting overpaid about 10% in 2023. the government has cut back on that, which is part of the pressure on the industry. Today, it's about 4% overpayment. Next year, it'll be down in the 2s. And over time, probably in another year or two, it'll be down to 0% relative to kind of the traditional program.
Thank you very much, Lance. Really appreciate it. And sorry, Lance, I forgot to ask you, would you be a buyer of UNH right now with fresh money?
Yeah. This would be my top pick. This is the beginning of an insurance cyclical recovery. I think first quarter the stock was down 18%. Second quarter to date, we're up about 25%. And my price target's significantly higher than we're at right now. And I think there's a multi-year recovery before you get back to target margins. And so I have conviction in that. Yes.
Thanks. Thank you very much, Lance Wilkes of Bernstein. Just to update you here, Luigi Mangione, who's accused of killing a UnitedHealth Group executive, Brian Thompson, his trial is now being delayed until the beginning of 2027. Okay, still ahead, today's market movers with Bloomberg's Matthew Griffin. We'll find out what's driving the shares of a defense tech company. Let's check out some other movers south of the border. We are joined by Bloomberg Equities reporter Matthew Griffin. Matthew, thanks for giving us the time. What's happening at AeroVironment? And can you remind us what the company does, please?
Yes, well, Andrew, thanks for having me on. This company, it's a really interesting one I've followed for a while now. They are a U.S. defense contractor. They make drones and counter-drone technology. And this stock getting a lift today after the U.S. Department of Defense requested $75 billion for those technologies, drones and counter-drones, for the fiscal year ending in 2027. Of course, these unmanned systems have been really front of mind for military planners and for military sector investors. Since the war in Ukraine, Ukraine has used drones to great effect to hold off the Russian army. It's been a priority for the Trump administration, for Defense Secretary Pete Hegseth, of course, the administration calling that now the Department of War. And the war in Iran has only underscored further how effective drones can be on the modern battlefield with their use both by Iran and, for the first time, these use of sort of cheap drones by the United States. So now you're getting this funding request that's lifting shares of AeroVironment up about 7.5%. Also shares of several new entrants to the space that just went public. Arxis, Avex, and Swarmer all rallying today.
We're hearing about these huge defense backlogs. Home builder D. Horton out with news. What's going on there?
Yes, so D.R. Horton up also more than 7% and wiping out a sell-off caused by the war in Iran. The home builder reported a gross margin for its home building business that was a little bit above estimates, about 21% versus just under 20% that Wall Street was looking for. Also, orders beat estimates in the most recent quarter. This had been a closely watched print. Home builders had been under pressure coming into the war. You had mortgage rates already high, consumers under some pressure, not wanting to make big purchases. The war has pushed rates up further because of the fears of inflation. It's also raised costs, both for home builders and for consumers. So just before this report, you had Barclays saying that U.S. home builders faced what they called a lost year. That could still be the case. This company saw declining profit for the 7th straight quarter, also trimmed its outlook for home closings this year. But right now, investors getting a little bit of optimism. And so far, this stock up about 14% year to date.
Thanks very much indeed, Matthew. Really appreciate it. That's Bloomberg's Matthew Griffin. Just looking at UnitedHealth, so the federal and the trial of Luigi Mangione for the alleged murder of a UnitedHealth executive, the federal trial has been postponed till January, but apparently the New York State trial is going ahead, and that's set for September. Obviously, UnitedHealth came in for a lot of coverage over spiraling health costs at the time of the murder of that executive. Thank you very much indeed for watching Trading Day.